Well, I'm joined now by one of the best-known economists in the debate. Capital Economics' Bootle weighed in by signing a letter to the Sunday Times supporting a much tougher political stance. Mr. Bootle, good morning.
Good morning.
Let's just begin by being clear. What exactly is it that you would like to see in terms of a deficit cut? Of what magnitude?
Well, I think the key thing is actually not so much the degree to which the deficit is cut initially, it's the credibility of the plan. I want to see a pretty tough forward plan which is going to convince the markets that this is going to be brought under control in the next 5 years or so. And indeed, I think the tougher and more credible that plan is, the looser the fiscal policy that you can get away with in the short term.
Indeed. What would be quite interesting to know at the moment, though, is a lot of economists are actually saying that unemployment would rise if the deficit was cut. Is that likely in your view?
Well, this is a very tricky issue. As a Keynesian, I'm normally against the idea of cutting deficits in a recession and a downturn. And there is the danger that if you were to do that, then, of course, you would weaken the forces of recovery. You might even send the economy back into a downturn. That's a danger. But there's an opposite danger, and economics is all about balance. And that opposite danger is that the markets lose faith in Britain. We see a financial crisis. Long bond yields are driven up, the cost of government finance is driven up, and confidence falls. And in the end, that could be, I think, an awful lot worse, and the end might come pretty quickly. An awful lot worse, and unemployment could then end up higher. So therefore, I think this is a balancing act, and what I'd want to see is a new government going fairly slowly on cutting, actually, initially. It's got to be, I think, a bit tougher than the current government's plans, but I wouldn't want it, to see it going gangbusters initially. But then the problem, the degree of cuts building up progressively year after year after year, so that by year 5, it's really very tough indeed.
Indeed. Now, if we take a look at what's been happening with the pound recently, we've seen the pound plunging recently. What effect do you think that that's going to have?
Well, I don't think at the moment it's going to have really much effect at all. There's a lot of hysteria about all this. The pound hasn't actually come down that much at 150 against the dollar. It's frankly probably just about fair value. I think that's probably pretty reasonable. But it's a foretaste of what might happen, I think, if we were to get a confused election result and there were then to be an extended period of dithering in which the politicians couldn't get their act together and come up with a credible plan. I suspect in those circumstances we would see the pound weaken. Now, by contrast, if actually we had a clear election result and a government of whatever colour actually put together a pretty tough plan, then I think you will also see that there's scope actually for the pound to go up quite a lot.
Let's talk a little bit more about the idea of a hung parliament. It's looking more likely than ever at the moment. Would you worry that actually there couldn't be a very credible fiscal situation in that respect?
Well, I think you've got to be concerned about that. The markets are bound to be concerned about it, and that's why I think that the morning after an election of that sort, then there would be, I think, mayhem in the markets. Now, my suspicion is that eventually we probably get to the same place. Eventually we'd have some sort of minority government or coalition government or something or other, which would, I suspect, hammer out a plan not that different from the sort of plan that a majority government would be forced actually to bring in. But it would be a very uncomfortable ride, and of course we might go through many weeks, perhaps months, in which the markets couldn't be sure, and in those circumstances you get mayhem in both the currency markets and the bond markets.
Now, there is a split amongst very eminent economists. Some are arguing just as strongly as you are that tightening at the moment is really not what should happen, and we actually need more liquidity, more quantitative easing being put into the economy. What would you say to that at the moment?
Well, I'd say quite simply these things aren't opposites. I'm in favour of more QE. I think the Bank of England has left the door open, and in my view, quite shortly, large amounts of money will be pushed through that door. I'm pretty convinced that QE will have to be extended. And there's no contradiction between that and the idea that you have to do something about the government's budget deficit. In fact, the two go together. It's precisely because I am a bit concerned that tightening the budget deficit might well cause some problems with the pace of recovery in the short term, that I want to offset that by boosting QE and potentially to a massive extent.
What do you think the UK, is it possible indeed that they could kind of face a fiscal crisis with rising gilts and a lower pound? Is that something that you think could happen in the short term?
Well, I think it's a possibility. It's a threat. It's what the markets are worried about. But it's by no means inevitable. A lot of people, I think, get this issue completely wrong. We've had before government debt levels in proportionate terms far, far bigger than this, 250% at the end of the Napoleonic Wars and at the end of the Second World War as a percentage of GDP. So we're nowhere near that. It can be done, and what's more, the Japanese example has shown that it can be done also with pretty low bond yields in the right circumstances. But if the markets get a sense that things are going wildly out of control, and in particular with a currency weak, a danger that perhaps a government might end up presiding, perhaps willingly, over much higher inflation, then bond yields start to move away from you. And at that stage, with a very high deficit to finance, it then builds on itself and you get a financial crisis.
And the consequences, obviously, then for Bank of England monetary policy would be quite significant, wouldn't they?
Well, what the bank would have to do then was a moot point. I mean, if it raised interest rates in those circumstances, that, of course, would be catastrophic for recovery. I suspect it wouldn't. What would happen is, as a result of this financial crisis, a government would then be forced to undertake a very, very tough programme of expenditure cuts, but it would be forced to do that in a way and at a time not of its own choosing. The markets would force that upon the government. Far better, I think, for the government to decide itself in the first place.
Just looking at the recent weakness of the pound, the Bank of England policymakers are meeting tomorrow. Do you think this is going to have any effect on their decision?
I think it'll have no effect whatsoever. It would be, I think, utterly bizarre to respond to weakness of the pound. I have come across some people in the markets asking me over the last few days, actually, could this prompt an early rise in interest rates, to which my answer is a resounding no. The idea of the bank trying to defend the pound with higher interest rates, I think, would be utterly balmy. We saw on the day that the pound came out of the ERM, September 16th, 1992, that raising interest rates in those circumstances by 5% did absolutely nothing. People realised this would weaken the economy and do no good whatsoever. Now, I mean, if the economy is seen to be recovering and or inflation is picking up very strongly, then, of course, the bank will move towards increasing interest rates sooner rather than later. But that condition is not fulfilled. I think the bank will simply ignore what's going on with the pound.
And do you think there's any likelihood that we might see any kind of credit downgrade before the election?
Oh, I think the chances of a downgrade before the election are very low indeed. And what's more, after the election, I'm pretty hopeful that we will see the sort of tough package that I'm in favour of and that we will not see a downgrade.
OK, thank you very much indeed for joining us this morning.